the emergency announcement out of the Fed, and why this is so incredibly influential for the massive collapse. I have all the details and what is going on right now here in the video. Let's get into it and talk through the details. All right, 2025, we're on the cusp of a massive collapse right now, and based on the economic data and other reporting that is coming out right now is showing that we are in a very precarious place right now based on this most recent data. Let me talk through the details of this and why. Going forward here, we should fully expect the Fed to come out with an emergency meeting, and when they do that, it's going to get ugly real fast, okay? Let me point out exactly what happened here and some of the economic data points that have been released as of recently and why this is looking pretty grim right now when it looks like the overall United States economy, and not only that, the global economy as well, okay? Now again, I will point out here in just a minute how this pertains to us and our money and the overall economy and things like that, and why we want to watch this, because this will impact all of us in a massive way. Here's the thing. Remember back a few years ago when we entered into a massive recession, what happened? They printed $6 trillion in the course of 1 year's time. They printed $6 trillion, most of which was done in a very short amount of time. There was money everywhere as a result, okay? Anyway, let's talk about the economic data really quickly. Then I want to point out for you really fast, okay? Obviously, here we are, 2025, right? Well, guess what happened? Last year, at the end of the year, typically November and December, we see a lot of different things happening. Number one, we see a lot of businesses hiring for seasonal holiday help. Obviously, that happens every single year, right? They need holiday help. That didn't really happen. We saw a lot of muted hiring. In other words, not a whole lot of jobs were created during that time. Even seasonal help was very limited. Not a good sign. Well, guess what? Generally, when the holidays end, November, December, obviously things like that, and then we roll over to the new year, all of that seasonal help, guess what happens? The first little while of January, it pretty much is all gone, right? A lot of these big businesses out there, big corporations, companies, they pretty much get rid of all of the seasonal help. I mean, for the most part, most of those people are no longer employed because the holidays are over. Maybe some people stay on for the first couple weeks of January, things like that, to help with returns and whatever else. But then after that, it's kind of over for that holiday help, right? Well, as a result, we didn't really see the hiring that most people were expecting. Not only that, we saw very muted spending as well, right? Again, remember, typically right around Thanksgiving and that time of year, when you see all the big discounts coming on, it's kind of like giving people a license to start spending. That's generally what we see. We usually see massive holiday spending, Black Friday, Thanksgiving, the weekend after, things like that. And then basically then through, like the weekend right before Christmas, we usually see a lot of spending. Last year, not much. Very pathetic, right? We didn't see that. Why? Everybody's tapped out. We have not seen that whole surge in spending. Well, what is that going to do? Simply means when we see this, it simply means that people are tapped out, they've got no more money, they've maxed out credit cards, or they're basically in a position where they're like, you know what, I'm just not going to do it this year. I just don't have the funds right now, don't have the money, I'm just not going to go out and spend money right now. And that's what we saw across the board with a lot of people. They were expecting way more spending than we saw. It was very muted. We didn't see the hiring. Not a good sign for the overall economy. Now, I said this a few times late last year. I was out in some videos and said the likelihood of us already being in a recession is very high, and we're likely not going to see the confirmation of that until early 2025, probably sometime around April. Why? Because the technical definition of a recession, as you probably know, is 2 back-to-back quarters with declining or negative GDP. Well, that's going to be 6 months, right? It's going to take 6 months, 2 quarters to get that reading. Well, if we entered into a recession, say in the fourth quarter, or we at least, started into one, the fourth quarter of the year 2024, and then the first quarter of 2025, we wouldn't get those 2 back-to-back quarters, until actually like April when we roll out into the second quarter of the year 2025, right? So my point is, we wouldn't really even get that confirmation until at that point, April or after, sometime at the very earliest. But the point is, right now, okay, for 2025, we have, as always, every 6 weeks, the Federal Reserve comes together and they have their FOMC meeting where they come together and they talk about interest rates and the overall economy and what they're seeing and things like that. Well, late last year as well, we were seeing the minutes out of the Fed coming in showing, hey, maybe this economy isn't all that strong. even though they kind of put a little bit icing on the cake and they're like, it's pretty good here. Let's just pretend to tell the public that it's looking pretty good. But realistically, they were showing that, the economy's not doing so well. It's not doing that great. Well, guess what? As the Federal Reserve continues to move forward and we continue to see these interest rates holding very high, again, it's just continued to strain the overall economy, the businesses, the consumers, you and me and everybody else out there. It is straining the finances of everybody in a massive way. Well, guess what's happening? Late last year, again, the last few months of the year, we saw the jobs reports coming in very, very weak. In fact, you didn't really see this. In fact, nobody talked about it. As we continue to see the jobs reports roll in, and you saw, whoa, look at all these jobs, 12,000, 100,000, whatever jobs being created. What they weren't telling you is that a lot of that was, number one, temporary workers, again, holiday workers, stuff like that. Election workers were mixed in there as well. And not only what they didn't mention is that in the private sector, if they would have stripped out government workers, the private sector would have been negative. We would have been seeing negative job growth. You know, obviously it's not growth when it's negative. We would have seen negative job reporting on the private sector. That's not good. The only thing that brought those numbers positive was actual government hiring. So that's not a good sign as well. The point is, as we continue to move forward here, as I've said this for a long time, and I've said this for a couple of years, the most important economic data point, in my honest opinion, is the labor market. The non-farm payroll number, the jobs reports that we get out once per month, and what's going on there. We're seeing very bad job economic growth. Job number growth, and we're seeing very just poor numbers coming in. Not a good sign. When we see the economic data coming out that's weak, but then when we see the job market data coming out, and that's very weak as well, that is giving us a very clear picture as far as what's going on with the economy. Not looking so hot, right? So anyway, my point is, going forward, I would not be shocked. In fact, I fully expect this as we continue to see this economy unravel even more. But by the way, remember this. They're going to act like this economy is so good, right? Everybody, they've been doing it for years. They continue to act, oh, this is the strongest economy we've even seen in decades. Okay, fine. Maybe it was strong for a little while, but it certainly hasn't been very strong for at least the last year, year and a half, or maybe even longer. Once the Federal Reserve started increasing interest rates very aggressively, that's been really tough for everybody. Again, consumers, you and me, and businesses, small, medium, and large, it doesn't matter. It's been tough for everybody. Well, as a result, as I've said before in other videos, it contracts, right? It takes time, but when that thing contracts and interest rates are held very high, it really contracts hard. And when it does, I mean, it's going to take a long time to kind of reverse that train and get the thing moving the opposite direction. So moving forward, I would fully expect the Federal Reserve to come out with some emergency rate cuts, okay? That's what I mean by this emergency announcement out of the Fed. Remember, they do have their FOMC meetings every 6 weeks. And again, maybe they'll come out during those meetings and say, oh, we'll continue to cut by 25 basis points, and then play around with some very fancy language and basically just beating around the bush saying, oh yeah, we're going to be, we're going to take a cautious stance on inflation, or whatever the words that they use going forward, right? But my point is, when we start to see this economy unravel quickly, guess what the Fed's going to do? They're not going to wait for the next FOMC meeting. They're going to come in and say, hello, emergency cut here. Yeah, we're seeing the economic factors and the economic data points deteriorating faster than our expectations. Therefore, we're going to come in and emergency cut 50 basis points or some weird number, right? Again, it could be 25. That'd be a little bit weird if they came in and did an emergency cut of 25. I would anticipate an emergency cut of maybe 50, possibly 75. Now, here's what we want to watch for. When the Federal Reserve does come in and they have one of these emergency cuts, what is that really signaling to us? Number one, hey guys, we blew it. We kept rates way too high, way too long. The economy is unraveling. We've got to get ahead of this thing before we get into a full-blown recession, which realistically, even if they come in with an emergency cut, it's going to be too late at that point. Again, waited too long. Big shocker there, right? But anyway, when they actually come in and do these rate cuts, okay, here's what I want to point out to you. The more that they cut, the more urgent the situation, okay? If the economy is so strong and everything's good and robust and growing and things are not collapsing, they're not going to cut aggressively. They're going to cut 25 basis points. There's not going to be an emergency cut. But if there's an emergency cut and they do 50 basis points, 75 basis points, what that's signaling to us is that the economy is a lot weaker than we want to admit, and it's not doing so hot. So we're going to come in and offer this, emergency cut. We're going to offer all these, words that make it sound like, oh, we're just trying to help out the consumer and the economy. But really what's that signaling to us is that the economy is not doing great whatsoever, and they got to get ahead of it before we drop into a major recession, which we're likely going to fall into no matter what, because if they wanted to avoid a recession, they should have thought about this like a year ago. That's the problem, okay? Anyway, my point is, long story short here, well, I guess it's kind of too late for a long story short, but the whole point of all this is, Remember, when we fall into an economic recession, an economic contraction, whatever you want to call it, it's all referring to the same thing. What happens? They print massive money. Back in the olden days, like a few years ago, well, what I should say is not a few years ago, like 16 years ago, in like 07, 08, 09, when that whole thing was unraveling, they printed hundreds of billions of dollars. When it came down to 2020, 2021, they don't even mess around with billions of dollars anymore. They do trillions. Trillions of dollars is what they appropriate now. My point is, next time round, when honestly, we're not that far off. I mean, we are like so close to this thing. When we get this whole official reporting and oh my, we're in a recession and all the official language that comes out like that, we're going to see trillions of dollars printed, trillions of dollars being appropriated. How's that going to be appropriated? Don't know. That's the big thing yet. We don't know where that money is going to be allocated, where it's going to go, into whose pockets, how much are we going to get, stuff like that. But my point is, there will be. They do the same thing every time. I know that some people here in the community leave comments down below and say, they're never going to do that again. They do it all the time. Do you realize from like, I don't know, 2008 out until just a few years ago, they were literally stimulating at a pace of billions of dollars a month. It was called quantitative easing, right? It's literally what they do. They call it QE. They did it for years. Nobody ever talked about it because, I mean, people talked about it, but it was just mainstream. It was just so common that it was just like, yeah, whatever. Fed's printing another 68 billion this month or some ridiculous number. Is crazy. A lot of people don't even realize they did that. They stimulated for literally like 12 years, something like that. It was nuts. Straight every single month. It was a lot of money that they were doing. My point is, it is not unheard of, and they will absolutely do this once again. They will absolutely print tons and tons of money again, and where that money goes, that's yet to be seen, right? Anyway, so what I want to bring to your attention really quickly here, again, I will continue watching everything very closely. Once we get anything like this or any further details on any of this information, obviously I'll bring it to your attention right away in these videos or on live streams, whatever I need to do. Again, I'm here for you that I possibly can be. Stay tuned. This is going to be an exciting year. We're going to get a lot of announcements, a lot of big things happening this year. I guarantee you that. Stay tuned. If you haven't done so, please subscribe down below. Totally free to do so. Big subscribe button right down below the video. Again, thank you so much. I'm here for you, that I possibly can be. Also, feel free to share this video. There's a share button down below. If you can think of just one or two people that benefit from this information, please feel free to share this with them. Again, share button down below. Thank you. Really appreciate it. Otherwise, check out the well over 5,000 videos here on the channel in the video library. The popular videos I've hand selected for you down below in the description or the top of the comment section. And right now, showing up on your screen as well, you'll see some videos there. Thank you so much. Please have a nice day, and I'll catch you again later in the next video.